Welcome to Trading Lounge on the 8th of April for the US indices and with the S&P 500 here. We're in an impulse wave to the upside and certainly looking at 3,000 and above, but our previous high over here in this band that we're just approaching now is going to give us the resistance here. There's also, unfortunately, there's different ways that I can count this impulse wave to the upside, but it doesn't really matter because we are getting our setups from the corrections and we're trading the trends to the next largest number. So all we need to do is identify the correction and then we use our setup patterns to trade long again. So that's all we're going to do because in this instance here I've got wave 2 and wave 3 and wave 4 here, which I'm not really happy about because it doesn't look like a wave 4, it's rather sharp. And then up for wave 5 here. So our job has been to count 5 waves in this little last structure here that will take us into the 2900 area here, and then we'll have a correction either way. The other way to look at this too is that this move up through here is just wave 1 and back for wave 2, and we've got wave 3, 4 and 5 moving up higher here, and that also plays out as well. So I've got a few counts within all of this, but this is the one I've been sort of sticking to. The other problem here, so we're basically going to go to 29 and we've been trading long through here, so we're going to be getting out here, and I'll get to that in a moment. One of the other problems here too is that I could also count this as wave 1 and wave 2 here, but on the Nasdaq we've got an extra low here, so not that it's a big deal, but you know, when we've seen other markets, and I think the DJ as well has taken this low out here, then it's a little bit difficult because at this stage we could count this 5 waves to this point with an A and a B and a C wave to here, but otherwise this goes to here and then this goes to here. So I don't understand this one here just yet. So it does cause a bit of a problem, but it doesn't really, whatever the count is, it doesn't really matter because we know that we need to get out at the 2900 area here, and then we can look for a correction there. So there's two possible counts, and this is one of them here, and there's also the possibility that this blue wave 3 here can be the green wave 3 here, but either way it still doesn't matter because we know that we're going to get some type of correction across the 29 area here, and then we can move back in from that point. We can even move in lower from here as well. So we've been long roughly down here. We've taken part profit in this space here, which is always, it just takes a lot of stress off, you know. And then we'll move the stop up, and we can move the stop up even further now. And we'll take profit at the 2900. In fact, we can actually come in even under here as well for this here. We'll just keep it a little bit lower here, and we'll look at that on the tick chart in a moment. So when we go to the tick chart, this blue wave 3, I've got that as green wave 3 here, because it just depends if I use this one down here or not. I mean, it counts quite nicely if I put that here. I can go 1 and 2 and 3 and 4 and 5 here, an A and a B, and then 1 and 2 and 3 and 4 and 5, a truncated 5th wave here. But then that doesn't, you know, the other side to this as well is that this move up here can be counted as wave 1 and it'll ABC for wave 2 here. So there's a whole lot sort of going on here that I can't pin down. And Elliott wave, and when you think about it, you know, some of the time you know what's going on, and you just know it. It can't be anything else, and that's fine, and you can use that. But there's a lot of times when even the best people that use Elliott wave don't have high confidence in their trade. So I'd rather not look confident all the time. I'd rather be as honest as I can and say, well, Pete, you know, what do you think about this? You know, and I say, well, I'm a bit unsure really. So, you know, in that case we need, you know, extra sort of strength in perhaps an indicator or something else to strengthen it up. So let's just have a look at the tick chart here for a moment. 100 ticks. So the last time we spoke here we were in here. We had this as quite a nice little A wave here, an A and a B and a C here for the B wave, and then 5 waves down here. And in this 5 waves down here, we've got overlapping wave structures, so it's worth noting that as well as wave 1 and 2 and 3 and 4 and 5 here. So it does occur, and you know, we just need to be mindful of that. So basically we move the stop up to here, and maybe I would have suggested to go long again on support of 72, but I didn't draw it in. But you know how it's also interesting to see. You can see while we're on the tick chart, you can see that it's got support here, you know, so it makes the first high above the level, then just allow it to do that. Then you draw the line across here, you go long here, and then we're at the next level here, the 80 here. And then you can see here too that that the market has migrated from being resistance here, the arrival, the reaction, the first high above the level, and then an A and a B and a C. Now, normally in a classic trading levels pattern, would see that come down further. So this is the first variation, well, pretty much the only variation where it doesn't come down and just sits on there. But even so, we would take long above that one, would take long above and come down and take long above these ones here. So you should be long here again with the stop under here. And you could do the same here too at 85. You could do the same at 90 here. They're all kind of important, but it's just which ones are sort of more important. This is the subgroup 2 area here, so this is the most important for me. Now, we're heading up to 29 here, and we're counting 5 waves up, so we've got 1 and 2 and 3 and where are we here? 1 and 2, okay, and then all of this is a 3rd wave, a 4th wave, 5th wave, ABC for 2 here, then 1 and 2, also overlapping wave structures here as well as 3 and 4 and 5 here and 4 here. You could probably count that as part of the further bull market going up higher here, but this looks like a wave 4 here, so it's definitely, I would say that we've got the problem is in the overlapping wave structure here. So we'll take that on board. So we're looking for a bit of a top to come in here now, and maybe we don't even make it to the 29 here. I mean, I think we should, but looking at the structure here of 1 and 2 here, so then this will be all the 3rd wave to push up here in terms of 1 and 2 and 3 and 4 and 5. Oh yeah, we'll get close to it. So we can move our little stop here, and we can place it. I can't bring it in front of the price here, unfortunately, but placing it there would settle that, if that was breached, then that structure's over at that point. Maybe I counted it wrong and it can come back down to this wave 4 here and then move up, but then you've got to kind of take a balanced view of it and say, well, we're pretty close to our target, we may as well tighten things up, just to be nice and safe. Now the other point here is that when we get to this area here, the 2900, we're going to see some correction. So I've brought it back down to subgroup 2 here, because we know that when we're working with a level like this here, we drop 1 degree lower. So above here we've got 10, 20 and 30. Okay, I don't know what that 4's floating up there for. Probably meant to be a 5. There's a very high probability that we're going to get some sort of reaction here. Okay, it might move up to the 10 here, the 29.10, and then sort of move back down. If I was totally wrong and this just kept on moving all the way up here, then I would only classify myself as being wrong if we got support on top of 29.30. If we got tested support on 29.30, then we would just be pushing straight up to the 30,000, 3,000 at that stage. Otherwise, we're going to be pulling back here. This is the range that the corrective pattern will occur in here. So I think it's always best to take the money around here and then just wait. And wait until we can see that the correction in this space here unfolds. And this is where you can lose money. So it's not good to be trigger happy in this space here. So we'll just allow this pattern here to unfold to a point where we can understand it. And in that case, it normally needs to mature somewhere along the line, so it needs, to mature sort of well over the 50% mark, so 2/3 or something. And then the more that it matures, the more confidence we're going to have in that particular pattern. So we could go long here again, but we would need to know that we've actually got a corrective pattern to this point, and then we need to build into it, and then we can build into it, and we can build into it, and then we can trade up. Up to the next 100 points here, up to the 3,000 area. So that's that really. I'm just really going to leave it at that because our trade for here is basically done. We're nearly at this level here, and this level will give good support because of all this over here as well. So we're certainly doing all the right things. And if you do all the right things over time with a method that works, well, then you'll have your edge and you'll come out in front. So we'll get to here, we'll take profit there, but I'll do that on the hourly chart. Otherwise I end up with trades all over the place on different charts and it becomes confusing. So we're moving our stop up into this space here. You could probably move it high if you wanted to, and we're going to be taking profit here. You could also move the stop up as you go here as well. We certainly want to lock that in there, and yeah, quite a nice little trade after all. Alrighty, thanks for tuning in, much appreciated. Cheers.